I would say it's more a question of talked about a lot, but less actioned upon. If I look at my euro-dollar view, for example, still going for euro-dollar lower. You're seeing multiple ECB members, worried about the drag on inflation from a stronger euro, right? So weaker dollar maybe in some parts of the US's interests, but others are looking and see, is this good for their own economies as well? And the answer is no. Whereas from a valuations point of view, maybe dollar lower against the rest of Asia. So it really depends on the cross that you're looking at.
Hey, Jeff, let me go American on you right now. The hallmark of these early days of July, and Paul mentioned this yesterday, the grind in the stock market. What does it mean when you see a time series grinding?
Well, it just shows if it ain't broke, don't fix it, right? There's no reason right now to disrupt the market drivers. Yes, it's concentrated. Yes, there are questions about earnings growth, but there's been nothing done either on the policy side or on the growth side or any exogenous shock to actually shake people out of that. Yes, on the margins, when it's grinding higher, it means conviction is steady. But ultimately, markets are made at the margin, so no one wants to be the last marginal buyer. So that's where care is needed, and where you can hedge, you will.
Jeffrey, we're looking at the weakness in the U.S. dollar, and some folks are just questioning simply, is it just simply taking some profit off of what may have been an overvalued U.S. dollar, or is it something else more fundamental about the American economy?
Well, so we have to give credit to some other economies as well. Take the euro, for example. They did surprise with a rearmament drive. Germany passed its constitutional debt break amendment and its recent fiscal stimulus without much incident. That to me was quite a surprise as well. Some others, valuations, given the UK's fiscal situation, for example, I think warrants a bit more scrutiny, whereby if I look at dollar versus Asia, that's where a lot more of adjustment is needed, higher Asian currencies. And I think that's where change in terms of Asian central banks' mindset, allowing their currencies to strengthen, not worrying too much about export earnings, given the way trade is going, probably they're not going to be that high anyway. So those things are going to pressure dollar valuations over the longer term. So yes, there is a US story there, but also there are positives elsewhere too, but just don't push those positives too much.
Well, if I don't want to push them too much, how about the euro? I'm asking for a friend here who may be coming to Europe in the fall. One spot 17. Where does the euro go here?
Well, let me just say this first. I'm still waiting to see Tom, in the tube, though even it might be not a salubrious enough.
You can find him at the Ned, Jeffrey.
Indeed, yeah. But if you go on a train in Europe, so personal experience, American accents dominate. So I think that just shows that US purchasing power in real terms is still very, very firm. Yeah. But on the other hand, if European companies are looking at export earnings plus tariffs and the like, I think they are careful. And I think that's why ECB members, even the hawks, they've started to change their tune.
For you, an extended conversation with Geoffrey Yu of BNY will continue with Mr. Yu. We say good morning on your commute across the nation. Good morning on YouTube, Bloomberg podcast. I got briefed on it yesterday from our Google types. We are humbled by the reach of all this modern technology. Thank you so much for subscribing to Bloomberg podcasts out at YouTube. It's growing each and every day. Wendy Schiller with us after this extended conversation with Geoffrey Yu. Eric Adams of New York City in the 9 o'clock hour. Geoff Yu, we had Yardenian reaffirming his bull call on the American economic and financial experiment. He calls it the Roaring '20s. He's been incredibly right since October of 2022. Your equity strategist, Alicia Levine's been absolutely brilliant. Are there commodity vigilantes? If I see copper in Chicago reaffirm a 560, I mean, are there commodity vigilantes?
Well, the copper in Chicago is going to look very different compared to copper in London, right? So that's the first aspect.
But Jeff, just stop. Pharaoh looks at London price. I look at Chicago price. Which is the real price of copper, oh wise one?
The real price of copper in any region will be determined by the marginal buyer. Where's marginal demand coming from? And that's where the US price does matter. Because if you look at terms of trade for those like Chile, China is not buying as much on the margins, so I think, that is where we are seeing, some softness in the non-US exposed markets. Of course, is this an opening gambit, compared to the rest? It is possible. I think people are just, looking at this as the first move. Now, in terms of whether you can see greater production in the US, that's an open question. similar to rare earths and the like. Even if you want strategically, to shift refining capacity back onshore, it will take time, and that's something that a short-term, one-day move in markets probably cannot account for. A 5 to 10 year lead lag time in building a smelter, right? So I think that's where some realism needs to step back into markets and also commodity terms of trade.